All right, Colin, how are you doing today?
I'm doing well. How are you doing, Harry?
Excellent. I'm excited. I'm ready for our first inaugural episode of Wannabe Angels. Is that the title we decided on?
I think that's what we decided on. We want it to be Angels, but we're also just kind of like the JV team, so wannabes for sure.
Yeah, definitely JV, but hopefully moving up to varsity at some point in the future. But I mean, I think that's kind of the tough part about angel investing is sometimes you don't know how you're doing for 7 to 10 years, right? Until you start seeing returns.
Yeah, just a cool decade later, you'll know if you've been successful or not. So make some
Yeah.
bets and see what happens.
Yeah.
Uh,
Well, and I think that's sort of why we wanted to start this podcast because we're definitely early on in our angel investing journey and we don't know how we're doing, or at least I don't know. I don't know. I don't really know how I'm doing. I don't think I'm doing terrible. I don't think I'm doing great, but I'm having fun. It seems interesting. It seems exciting. So I'm going to keep doing it. And that's why I agreed to do this podcast with you.
no, agreed. I'm, learning more about doing the direct investments on the angel side. I've had some, bad fruit ripen early on me. So I've definitely had my failures, and I'm hoping my, the J curve of venture returns comes back to help me out in a significant way. But right now, yeah, um, not going super well. But I'm very excited about what we've both been investing in and the kind of crop of what's next.
Yeah.
So
Cool. Well, I know all of these topics and more we're going to be covering in the future, and we're going to be doing a weekly episode. So hopefully everyone enjoys this first one. Can't make any promises, but I do think with time we'll get a little better. And, I guess for those who are listening who, maybe are coming more from my network that don't know you, tell me a little bit about yourself, Colin.
yeah. Well, so Colin, long time tech startup guy, have been working in marketplaces specifically and kind of B2C consumer tech for over a decade now or more. Most recently was at Outdoorsy, where I was chief product officer, chief revenue officer, as well as a business we spun out called Roamly, which is an insure tech. Um, and since leaving there, what I've been really focused on is advising startups and really also helping them through the fundraising process. Through my career in tech, I've done about 200 plus million in fundraising as kind of the right hand of the CEO and founders. And that's taught me a lot about what to do there. But it also kind of got me interested in being on the other side and doing the investing. And so I've been starting to angel invest both with my time and money and doing some syndications as well for startups that I work with. I really enjoy that part, kind of hustling to help them get funding and really helping founders shoot their shot for companies
Yeah.
that I believe.
Well, I think we've been working together a bit over the past few months, and it's definitely becoming apparent that you've got a lot more skills than me on the fundraising side. So hopefully, we'll be a good team on this podcast and other projects and endeavors and things like that we're working with. And I kind of imagine that right now in this environment, fundraising is a pretty big skill, and pretty high in demand skill. If you got it and if you can help startups with it, right?
Yeah, I'd say right now the fundraising environment is really tough,
Yeah.
just generally, and deals aren't getting done, or that's kind of like generally the sentiment. And so I try to do my best to help people kind of navigate that, set the right expectations, and really get in touch with the right investors for them. That's the big
Yeah.
part. It's not spray and pray. It's like very targeted, and you got to be on the money right now. So, but my audience is a little bit different than yours. I think I
Yeah.
very much come from a tech operator background. That's pretty much the only people I know. Heads down, grinding on startups, marketplaces specifically is a big area. So I think they'd love to learn a little bit more about you. We're all familiar with ride sharing and what that is, but tell us a little bit more about your story.
Yeah, definitely. So I actually, before my current career, I used to be an aerospace engineer for Boeing. So kind of doing the exact opposite of what I do now. But about 8 or 9 years ago, I actually started my blog, The Rideshare Guy, started driving for Uber and Lyft on the side and covering the companies really from the perspective of the worker. And, fast forward 8 or 9 years later, very good timing, complete luck by me, just happened to drop into ride sharing at the time of, super crazy growth. And the company's exploded. Our site did really well. We expanded into YouTube and podcasts and courses and books and basically any box on the internet. We are now covering rideshare and a lot of last mile delivery. And so really over the years, I've just tried to leverage that media side of the business into other areas, and angel investing is one of them. So I've been advising companies really almost since maybe year 2 or 3. I started getting equity to advise companies, and a few years ago, finally, at least in my head, I thought I might have enough cash to do some angel investing. And I don't know if that was quite true, but I've been angel investing over the past few years, and invested over $500,000 $600,000 of my own money over the past 3 4 years, and learning a lot, having a lot of fun, and kind of just want to continue to get better. And that's sort of why I'm excited to do this podcast journey with you, to have fun, chat about the stuff that you and I are kind of been texting about and emailing about and talking about off the air. I feel like there's a lot of people on a similar journey, right? And so that's sort of why I want to talk about it. And I'm definitely no expert, as people will see. I don't know what a J curve is, but it sounds familiar. But we'll definitely get into all that and more.
Totally. No, that's super awesome.
So I think the format we're going to use for at least now, until we figure out a better one, is we're going to kind of cover sort of a topic that I think is, people think about, and that we have some personal advice and experience on. We're probably not the people, or at least I'm not the person to like define every term when it comes to angel investing, but sort of how we think about it. And so I think that's going to be the first thing we'll cover. And then I also feel like there's so many angels and VCs on Twitter. We're always seeing these threads every week that are kind of going viral or semi-viral. So I thought it'd be fun to cover one thread that we saw in the past week or two. And it sounds like on our next episode we'll have a cool guest too. So that'll be kind of the format that we'll use going forward. How does that sound?
That works for me. I'm very excited about some of our guests. In particular, I think what we're trying to go after are
Yeah.
people that come up through the ranks, angel investing,
Yeah.
learn some hard lessons, and hopefully can share that with us. Because I think that's one of the things that is just not out there in a super
Yeah.
meaningful way, is how to become an angel investor. I think there's more things today that you can, join to learn. But, over the past couple of years, it was certainly the school of hard knocks. And so I'm excited
Yeah.
to learn from some of the experts out there, or
Yeah. And
like
I think
experts.
Yeah, I think what's cool is you for sure, and me a little bit, have a pretty decent network. And so, I think we can kind of get, there's definitely two types of guests that I think we'll be going after. One, sort of the bigger names that have, maybe done some other podcasts or out there in public about it. And, they'll be fun to learn from, and people know their names, and you'll try to get them on. But then I think also the under the radar folks, right? The people who are making, 100, 200 investments, and you've never heard their name, or they're not on Twitter. So I feel like, at least to start, I think the plan is to go for a little half and half, and see how the content is.
Yeah, I'm excited for it.
All right. So, Colin, our target was to do a 2 to 3 minute intro. We're at 9 minutes. So we just went a little bit over, but we've got two topics that we want to hit here. So I think today, for our first segment, we've been bouncing this idea around, what is an angel investor? I mean, it's really kind of like core to this podcast we're doing. So when someone asks, what's an angel investor, what would you tell them?
Yeah, I mean, by the strict definition, if you're just going on, the internet, looking at Investopedia, something like that, it's, an angel investor is basically a high net worth individual who provides financial backing for startups or entrepreneurs in exchange for ownership and equity in the company. And for me, I guess that's a traditional definition, but I think more and more, what's become important is that many people, and like normal people, want to be part of the ownership economy. And there's been this big translation, both, from a legislative perspective, but also cultural perspective, of people trying to invest early. And so for me, angel investing is about getting great people that you want on your cap table to invest in your company, right? Whether that's friends and families, other accredited investors, we can go into what that is. But for me, it's, not only about money, but it's also about time and getting people kind of invested in your business, regardless of how large the check size is, or, whether or not they're a VC or something like that.
Yeah. And I mean, I feels like there's something, I don't know, sexy about being an angel investor, putting it on your LinkedIn or telling people you're an angel investor there. I mean, I feel like the interest in becoming an angel has definitely increased in, I don't know, maybe the past 3 to 5 years. Like, I kind of joke, like, seems like everybody is or wants to be an angel. I don't know. What do you think about that, and maybe why that is?
Yeah, I mean, definitely some cachet, right? You feel very
Hmm.
important when a company sends you, hey, I want you to invest. Here's my deck. Here's my financials.
Yeah.
It's a power thing, right?
Yeah.
So, in
They're
my
asking
mind, that's
you
a
for
lot of,
something.
yeah, that's a lot of what it is. For the people that are actually like what I would call actually angel investing is they're putting some money down, right, on a
Hmm.
repeated basis. If you're an angel investing once per year, I mean, I think that's pretty infrequent. In kind of my mind, people that are doing this more repeatedly and looking to do it on a repeated basis,
Yeah.
for example, like syndication, as I've started to look at it, it's like it ramped with one company that I liked and was like, hey, I can help them raise something here. I want to invest. I'm already investing and advising.
Yeah.
Why don't I get some other people to do it? And then all of a sudden now we're in a cadence where there's 1 to 2 deals a month. Uh,
Hmm.
and that to me is like where you're really starting to get into that realm of like
Yeah.
angel investing. So
So there's sort of like, kind of like a real angel. And I think about it like, I don't know, there's like a real angel investor versus like a fake angel investor.
yeah.
And it's not necessarily like, I'm not trying to put down the latter category, like, oh, you're a fake angel investor. But like, I understand why someone would want to say that. And, maybe they think they are, or, maybe they're sort of more pretending, or maybe they're just like faking it till they make it. Hey, we work in startups. We're totally a fan of that, right? Like if you're
Yeah.
in startups, you kind of have to, have that vision and fake it till you make it. Do you think there's a good threshold? Like in my mind, I would say someone that's doing, one investment maybe every 1 to 3 months, like 3 to 4 investments a year. Like, I don't even know that I necessarily care as much about the dollar amount because, like someone who's really wealthy, right? Like, if they're doing 25,000 checks, that's nothing to them. Like, I guess, maybe more percent of your net worth is like a good function, right? Like, if you're doing, I don't know, if your net worth is $1 million, I don't know. Maybe we don't have to go into that much detail, but if it's like a, a,
Yeah.
a decent chunk of your net worth, right? And it's only $2,500 checks and you plan to do 10 or 20 of them. To me, that's meaningful. And like, I would call you an angel investor. What do you think?
Yeah, I agree. I think it's about frequency, less about amount, right?
Mm,
And for me, the kind of like, doing one deal a quarter is kind of like a threshold where you're actually pretty frequent and reliable and looking at deal flow. If
yeah.
you get much below that, it's really more of like I would call it a friends and family investor,
Yeah.
things like that. So, but
Yeah.
again,
I like that. I like that
it,
threshold. I think if people trust us and they're like, here, we'll start our own, definitions, our own definition of angel investor is someone who does, more than I like kind of at least one deal a quarter. Like doesn't, have to be super strict, but like, I think you got to be doing some investments, right?
Yeah, and it's funny, like maybe I can tell you like the feeling when I felt like an angel investor for
Yeah.
the first time. This is a fun story. So, there was 2 moments I felt like an angel investor. First was the one where someone forwarded me an intro to a founder and
Hmm.
I got in touch with them. I didn't know anything about the business. I met them, they pitched me, I liked it, and I wanted to invest. And that to
Yeah.
me was like, wow, I'm just like an angel investor now, right? Like
Yeah.
it came out of nowhere. It wasn't like I had developed a relationship, helped the company, and not that that's not angel investing, but that was felt like I'm actually investing as
Yeah.
a job here. Another
That's
one
cool.
was I used this product twice here in Austin, and I loved it. And I just basically found the CEO on LinkedIn, reached out, and was like, "I love your product. I'm using it a lot. Can I
Nice.
invest?" And it just happened to be that they had like $10,000 open in their round. That was like all
Yeah.
they had to fill out. And they were like, "Do you want to fill that out?" And I was like, "Yes." And I wired the check the same day. And it's like very out of character for me, but that was like, I'm an angel investor in that moment. That
That's
was
cool.
like, uh,
I mean, I think that's also kind of what's fun about being an angel is like, especially you're often doing much earlier stage startups, right? And so, you're kind of going less off of like, the metrics and kind of the boring stuff and more off of the fun stuff, the feel. At least that's how I invest. I don't know if that's how you're supposed to do it, but I feel like I've heard, people kind of, to me, that's kind of
yeah,
like more what an angel is too. I guess like we talked quantitatively, now qualitatively, like what does it feel like to be an angel investor? To me it's like, hey, I like this team, I like this product, right? Like, there's often, like, to me, I feel like more reasons not to invest, in like a really early stage company, right? If it's such a, like great idea, someone would have already done it, right? That's kind of why startups are so fun, because they sound like such shitty ideas in the first place, because and then they end up one day working. So I definitely think like I don't know that I feel like an angel investor yet, especially on like, for me, it's a little weird because my media side of the business, I'm very public. Like I'm kind of a media whore, you know, like I've been quoted a lot, you know, we're in, you know, I always tell people we're like every box on the internet. And when it comes to like investing and even advising, like I really don't advertise it. I don't put it out there. I put angel investor on my LinkedIn bio just recently, like very recently, and now I get all these spam inbound pitches like, "Hey, do you want to invest in my company?" So I'm thinking about changing that because it's kind of annoying.
Yeah. What do you think that there's angel investing is at a certain stage of company? Like, do you think you can be an angel investor after like a series A, or is it only for like pre-seed seed? Like, how do you think about that?
Yeah. So I think that for me personally, I looked at it really as an education process early on. And so I kind of wanted to look at all different deals, all different stages, LP, you know, come in as a LP into smaller funds and even up to bigger funds. So I'm an LP in, you know, small kind of micro seed, multi-million dollar funds all the way up to, you know, like $100 million fund here in LA. And, you know, I've looked at, I don't know if I've done a second, or I don't think I've done a secondary, but I looked at a couple secondaries. I looked at, you know, a couple series A, series B. I think for me as an angel investor, though, you can have a lot more impact early with your time, right? Like when a company has 100 people at series A, like how much help can one angel investor give versus, you know, when it's one person, one founder, or, you know, a very small team. So I think that's what I like. Like, I don't know that, you know, again, right? I don't know if there's a cutoff, but you can definitely have more impact with your money as an angel early on, and also with your time for sure. So that's sort of, I think, why most folks gravitate and think early stage when you hear the term angel.
Yeah, and I imagine like your check size is more meaningful at that stage as well. So,
Yeah, I mean, I think depends on the check. Like, I think if you're like 2,500, they're probably
yeah.
getting you in, you know, more to get you involved in the company. If it's, I think, like to me, 25,000 like seems like a good, you know, number where it's like, hey, this is like an actual meaningful amount of money. I mean, obviously, 10 to 20 is fine, you know, and people will take it. But I feel like I often see, you know, like 25K minimums, right, which are of course like bullshit, right? Like if the founder really wants you, like there's no minimums, right, for anything. If they really want you, there's never a minimum. But yeah, I feel like that number is kind of meaningful. And I don't know, what do you think?
You know, it's a good question because I've kind of see it all the ways, like you said, is that if a company really wants you to invest, they're going to take whatever check you want. But I do think there is like a search cost for the founders or whoever's raising for the company. If it's not the
Yeah,
founders raising, that's a concern. But the point being is, I think that's why they always have like a cutoff is like I don't want to be pitching people that aren't going to give me a big check. And so
yeah,
I think that's where syndicates end up coming in and being really important is that there is a long tail of investors to kind of roll up and put in that do add value and want to give money but maybe isn't like worth the founder's time from a fundraising perspective to get those smaller checks or the all the paperwork to get them on the cap
yeah.
table, those things. So
Cool. Well, that was our first topic, angel investing questions, you know, answered by Colin and Harry. I think we're going to need to come up with a better name for each segment. But for now, I think the point is clear. We did a better job on time. We did 10 minutes for that. We were shooting for 6 to 9 minutes. Now, I think will be kind of the fun, you know, final section of the podcast, trending Twitter threads on angel investing. And so there's going to be no shortage of material here, I guarantee. I think we've picked this thread this week, which I'll be honest, maybe a little bit out of my league. So I might be relying on you a little here, Colin. I do know what Pro Rata is, luckily, but I might rely. I'll have a few thoughts, but we'll see how this one goes. We picked kind of a tough one to start with, but this thread sort of went viral the other day. Got 182,000 views on Twitter. You know, 400 likes, bunch of retweets. It's from Jenny Fielding. She's a managing partner at The Fund Global. Great name. Investing in pre-seed founders across money, health, and work. I follow Jenny. I think you do too. I don't know her, but I really like her following her on Twitter because she shares like a lot of good, interesting anecdotes, but also like advice, analysis. And she's like very honest, like about how she feels. Like, you know, another thread she had was like something happened and this really felt bad. You know what I mean? Like she's like very honest, like she's not trying to pretend to be someone or something she isn't. So do you want to read the tweet that she shared?
yeah, someone please explain to me why some of the most respected venture lawyers are coaching their founder clients not to offer pro rata to pre-seed investors. We're taking a ton of risk and are the true early believers in the company. This really sucks. I understand that
Oh,
sentiment,
you
right?
missed the emoji.
Oh, sorry. It's like the huffy
I think
face
there's
emoji.
a huffy face
Yeah.
emoji.
I first off, what's pro rata, right?
Yeah.
And so pro rata, right, from my experience and definitionally is basically as an investor, you put in a certain amount into a company, and if you were given a pro rata right, you're allowed to invest in the like
Right.
subsequent rounds to keep your ownership percentage. That's the
So if the
idea.
basically it's like if the company's doing well, you get to keep on investing, right? Which I think makes sense in principle.
Yeah, and I think what she's getting at is that it's becoming more of like a negotiation chip from founders
Hmm.
of not offering it up front when
Yeah.
it traditionally was allowed. And I do think with the advent of safes, and the safe we can go into it another one, but they usually have a side letter with it for the pro rata. And that isn't always necessarily given up front. And I think that's a
Hmm.
lot of what she's saying is like that should be kind of standard and par for the course and has been. And now that there are potentially venture lawyers out there probably trying to show their value and worth by telling
Yeah.
founders not to do it and have a negotiating chip. It's somewhat shrewd on that part, but I understand the frustration of investors as well.
Yeah. I mean, I guess I would say on the founder's side, I sort of see it both ways. One, it's like, if you don't offer pro rata, then it's like less work or less of a requirement, right? It's like pro rata is saying you have to do something, right? So obviously, if you don't have to do something, that's usually better for yourself, even if it may not necessarily be the right thing to do, right? But I think like where you and I can maybe share a good perspective is like we've been, we are, well, I don't know, we are angel or wannabe angels, and investing at early stages, and like this has definitely happened to me where I'm investing small check, and a company I've helped a ton, it's like they went off and raised their seed. I was nowhere near the picture, right? Because I don't help a lot with fundraising. I help more with like partnerships and customers and product and stuff like that. And they raised the round. He called me like the day before and just gave me an update on the round and everything. I was like, oh, I would love to put in a 5 or 10K check. And he was like, oh, I think it's going to be pretty tough to do it, right? And I was kind of it wasn't the biggest deal in the world, but actually the company ended up going under recently. But still, at that time, I would have liked to put in a 5 or 10K check because I'd been doing a lot of work. And like I get it though. He was like he raised millions of dollars, so like why is he going to take the time to include me, right?
Yeah, and it's an interesting thing because it is like a benefit, right? And the question is should a startup give it to every investor?
Yeah.
Is it really worth their time and effort? Because there are dynamics where so let's say we're pre-seed investing as an angel, and they start raising a seed round, but they have an institutional that comes in and wants to take the whole round, and they
Right.
say you're raising $2 million, and they basically don't have any room, right?
Yeah.
I think that's a lot of what happens and where people get pushed out. I think it's frustrating because then you're, getting diluted in that round and not maintaining your ownership percentage. But I also think, like in the case of the fund and people like that, they do pre-seed investments and then they have to follow on with like SPVs and things like that.
Yeah.
So it is an interesting dynamic, but definitely seems hyper aggressive on the venture lawyer side to be pushing that.
Yeah, and so I did exchange a couple tweets with Jenny, and again, like I think she's really nice to even respond to me. Who am I on Twitter?
You're the rideshare guy.
Now that yeah, sounds good. It's like I don't know who this guy is. All right, but she did say she's writing $250,000 checks, and she did ask for pro rata. So I almost feel like to her credit, I think she's in like a different ballpark than you and I are. I'm not going to be writing a $250,000 check anytime soon. I think when you're in that level, the pro rata and asking for it and also getting it becomes much more important. So what I did with a recent company that I came on as that I invested and also came on as an advisor for, I literally told her, the founder, I was like, I just want to ask you right now, like, we don't need to make an official document, but can I have like an honorary pro rata? Just sort of like, I just wanted to put it in her head that like, hey, I'm going to be working hard for you. And like, I get it. Like there could be a situation, right, where what you described, Colin, like an investor comes in, they're the only money, especially now where it's tough to raise money. They're the only person. They're like, no, we want to be the only person, for example, or, two funds or whatever it might be. But like, we want the only money in. We don't care about any other investors or advisors or whatever. Take it or leave it. Like if you're the founder, what are you going to do? Right. You kind of, if that situation were to come up, you kind of have to take it. Right.
Absolutely.
Yeah.
And I think you hit on something there that even Jenny says, you got to earn that pro rata, right? Like it
Mhm.
isn't necessarily, every round is, do you want to have the same people coming back in to continue
Yeah.
the journey with you, right? From a founder perspective, they may get investors in one round that have really been silent. They're just money and there isn't value add there for them and they
Yep.
don't want you to add on. So, like you said, it goes both ways and you need to add value to earn that. Um, Even if you get that pro rata, it's not a
Yeah.
given.
So I think one thing that will be cool with this podcast is that I feel like, we can kind of give advice based off our experience to different sides and different perspectives. And I feel like in this case, if there are founders listening, I think the way you said it is perfect, right? Like, you may not have official pro rata or, maybe they do. And then I saw in the thread, this is way beyond my league, but it's like, I guess there's ways where you can kind of like the pro rata is still meaningless. I don't think we should get into that because I feel like that's above my above my pay grade by a mile. But I feel like for founders, if there are early investors, like I think understanding like the mindset of like someone like you and me that came in with a smaller check, like we want to come in, like I'm invested, like I want to double down, right? Especially if I've been helping and adding a lot of value. And, I think it's pretty clear in the early stage, right? Like a company I'm working with right now, like I got them their biggest customer and then we added a bunch of other customers. It's like, okay, but one intro from me, it wasn't a ton of work, but like, wow, that's been pretty valuable, right? So like, I think if you're a founder and you understand that and like how it does matter whether you gave them the official rights or not, like do everything you can to at least give them that option to take their pro rata, especially like those early stage and smaller checks. I feel like that's kind of like the good tangible advice for a founder, in this situation.
Yeah, and just to like double click a little bit further on that, our experience, our mileage may vary. So
A lot.
take it with a grain of salt for sure. Um, but it's like one way to handle this because I think for founders the problem is that potentially have overcrowding in the next round like
Yeah.
that, and so if you give pro rata to everyone can participate, and then it makes it hard for a lead to come in. And so
Yeah.
I think there's ways to handle this where for people are really valuable and for large check sizes of people that you want to come in the next round maybe just do pro rata for a certain size check and above, or
Yeah.
a very selective basis. And so,
Well,
I
I
think
think
this
the way you put it though is great. Like, hey, if they've been adding value from last round to this round, like they get, sort of first crack at pro rata, right? And, sort of balancing that with the check size.
totally. I
Cool.
would, yeah.
All right. Well, anything else to add on this Twitter thread?
No, I think we hit that one pretty good.
All
So
right, cool. We did good time wise too. So I think we're now at just under 30 minutes for our first podcast episode of Wannabe Angels. I think that was a lot of
woo,
fun, and I think this might even be good enough to publish.
I hope so, but put it out there
All right. Until next week.
later, Harry.